What's going on, everyone? We hope you had a great weekend and are ready for some big moves this week. As I'm sure a lot of you have already heard, Trump enacted some pretty heavy tariffs on Mexico, Canada, and China, and the market has already started to move pretty big off of this news on Friday. There's going to be some serious movement in the market this week, and in this video, we're going to cover everything you have to know about this tariff situation, where the action is at right now, and the stocks to keep on your radar. We have a lot to talk about, and the market is already moving off this news.
It really is, Mike. That sell-off on Friday was pretty insane, and there's a lot going on with this tariff situation, so I want to give you guys kind of a rundown, and I'm going to start at the beginning of the timeline from last week. So, Mike, looking at the sell-off from Friday, the SPY really started to sell off in the middle of the day, right around like 1:15 Eastern Time, 12:15 Central Time. So this sell-off really started because Trump came out and pretty much said that a Reuters article was false. So I'm going to first, to try to clear some confusion here, show you guys the article where he's pretty much saying that, no, February 1st is still the target. Now I'm going to actually switch to the Reuters article, which was false. So this is the false article here, where they said that these were going to be starting on March 1st. So obviously now that is not the case, Mike. We've gotten a bunch more information that has been coming out about this over the weekend. So there's a lot of details in this, but I definitely wanted to hit on that because it really is where that sell-off started on Friday, and the SPY was actually very close to its all-time high whenever the sell-off started happening.
Yeah, so I guess long story short, the market got a little bit too excited because a news article came out and said that Trump was going to delay his tariffs by about a month, and the White House said, nah, they aren't getting delayed. And, now that we have a lot more clear information, Trump enacted 25% tariffs on Canada and Mexico, and 10% tariffs on China. There's multiple reasons for this, but some of the main ones are due to illegal immigration and the flow of fentanyl into the United States. What is very important about these tariffs is that Canada, Mexico, and China are the U.S.'s three largest trading partners, and they make up over $1.3 trillion in trade, which ends up being 43% of all U.S. imports and close to 5% of the U.S. GDP. These tariffs will go into effect starting Tuesday, February 4th, and as of right now, China has not taken any real specific countermeasures yet, but they are going to, and they have filed a lawsuit with the World Trade Organization. Where things start to get a little bit more spicy is what's going on with Canada and Mexico. Basically, Canada retaliated with 25% counter tariffs on over $100 billion worth of U.S. goods, but the tariffs that we are putting on Canada, they are going to be 25% tariffs with the exception of energy-related products. So basically, the U.S. is not tariffing Canadian energy too badly, which is a good thing because that will help with our inflation problem here, and especially considering that crude oil is the number one product that the U.S. imports from Canada, and that accounts for 60% of U.S. oil imports. That is somewhat good news in that sense. But long story short, Canada's definitely fighting back a bit, and they're not very happy with this trade war, of course, as no one necessarily should be, and Trump definitely proposed again that Canada can become the 51st state if they want to. So that was pretty interesting. With Mexico, they also vowed retaliation, but haven't given specific information just yet. But one thing that's certainly worth noting is that Mexico and Canada are the U.S.'s top trading partners for vehicle and car parts, and they account for nearly half of all U.S. motor vehicle imports. So that's pretty interesting.
It definitely is. I know a lot of people have talked about, obviously, Mexico and Canada with the cars and vehicles a lot over the years. Trump has even hit a lot on Ford and General Motors for going to Mexico for car parts and stuff. So it'll be interesting. Maybe even these companies will start to get hit in the short term if these tariffs start to hurt them too much, right? And that's really my big thought, Mike, is, okay, we're starting to see the market obviously react to these tariffs in a pretty negative way starting on Friday, right? What are the sectors that are going to get hit the most. I'm definitely watching those automotive businesses, but anything that deals with like chips, I'm definitely worried about Nvidia as well, with them talking about different import restrictions there. Obviously, tech is one of the bigger things whenever it comes to China, Mexico, and Canada. And then I know Trump even talked about even imposing more tariffs on the EU as well. Obviously, the specifics are yet to be decided, but nonetheless, he's just going out here on a tariff spree, it sounds like. I know that there's a lot of data that might show that, like, hey, the market might do really good this time of the year and etc., or might do really good in 2025, but I'm starting to get a little bit skeptical with all of this uncertainty hitting the market.
Yeah, so there's a lot we're going to talk about in today's video, but Trump is definitely firing away. Like you said, he's going after the EU as well, and that's expected to happen like at least in a couple weeks from now, but he's going after everything from, chips to pharmaceuticals to energy and everything you could imagine, which certainly isn't a great sign. But as we look at the heat map, we could see that some areas of the market are certainly already moving off of this news. You mentioned Nvidia. That one was down nearly 4% on Friday, but most stocks have been falling. Like you could see on Friday, 76% of the S&P 500 actually fell down in the red. So that's just something to be, aware of heading into the market tomorrow. As the market falls, of course, you could always look at, things like SPY put options, but there's also ETFs out there like UVXY and SQQQ that tend to do pretty well when like everything else is selling off.
I love these stocks in the short term. UVXY started to do extremely well. I know a lot of people talk about the gap fills out there, Mike. It filled the gap perfectly, bouncing off support there with UVXY, and it's coming at a great time where the SPY is starting to fall off in a bit more of a larger way. But I do like these two, of course. SPXS could be a good one to inverse the SPY, SQQQ, like you said. And I know Bitcoin even is down in the short term as well. Like, look at Bitcoin now, falling back under $100,000 a coin with all of this going on. Bitcoin obviously is not, I guess, weathering the storm as well as some people may have thought that it would. Now, something, Mike, that I did notice is that gold has been weathering the storm quite well. Gold was up again on Friday and posted another high.
Yeah, there's been a lot of money flowing into like safe haven assets like gold and silver, GLD and SLV. They're definitely worth keeping on the radar because, when you have a lot of real risk around the world and when people are panicking, these are assets that people have resorted to for hundreds and hundreds of years. So it's definitely worth keeping on the radar. Absolutely. But Tom, we also can't forget that we have a hell of an earnings lineup too.
Yeah, we definitely do, Mike. I can't believe to say it, but this week might be as big as last week. And I'm not going to say that the stocks are necessarily as large. We have some close ones. Don't get me wrong. Google, Amazon, AMD, no, I guess Apple, right? Or Microsoft. But at the end of the day, these are still some pretty big companies, Mike. Like Palantir really excites me on Monday and after hours. Palantir has been one of the largest stocks of 2024. It's been one of the most popular as well. So that's going to be, in my opinion, my favorite report of the week. Palantir, Monday and after hours. But there's so many like AMD, Tuesday and after hours with Google, Ford and Qualcomm and after hours Wednesday, Eli Lilly in pre-market Thursday, along with Amazon and after hours Thursday. So it's quite the rundown. And then there's even smaller ones mixed in like Affirm and just a lot of fun growth related type of stocks.
Lots of big movement is set to come, so that's awesome to see. And then even when we shift over to the economic schedule, there's even a lot of action there as well. So on Monday, 30 minutes after open, we have ISM manufacturing PMI data, which is big. We have JOLTS data 30 minutes after open on Tuesday. We have more ISM data with the services PMI 30 minutes after open on Wednesday. And then on Friday, we have non-farm payrolls, unemployment data, and Michigan consumer sentiment data. So lots of big movement all across the board. Save these times to reference later in the week. The market can move in bigger ways around these times. So definitely keep that in mind. Another thing we definitely have to talk about though is some important seasonality data. So as we can see by looking at this chart here, when the market has a strong January, it normally tends to snowball and continue that momentum throughout the rest of the year. We can see in January 2025, the market rose rose by 2.7%, and that is after the big sell-off that we saw on Friday. But the main takeaway here is that when we have a strong January, we could see that most of the time that momentum continues throughout the rest of the year, where when January has a greater than 2% return, the average return for the rest of the year, the remaining 11 months, is around 12.3%. When you compare that to just your average final 11 months of the year and just like any given year of 8.1%, that is a big, good sign to see. And, it definitely helps some of the broader positivity that we've seen so far.
It definitely does. That's some insane statistics to see. But I will say, every year's different, right? So whenever we start to look at 2025, there's a lot going on that might suggest that this might not be a year where we will need to look at historical data with 100% accuracy, right? Of course, every year you need to take the historical data with a grain of salt. But I mean, how often do we have somebody named Trump essentially tariffing every single country that we do business with, right? It's not all the time. And in the past, these tariffs have actually caused some pretty big shakiness in the S&P 500. If we go back to the last time Trump was president and we scroll back to 2018, 2019, you guys can tell the SPY definitely had a lot of shakiness throughout that time.
Yeah, the end of 2018 was a big time for traders. There was some serious movement, and as we could see by the chart, it wasn't all that bullish either. This was during the China trade war. For some of our OG traders that remember that, you guys know how volatile and crazy it was back then. So yeah, tariffs definitely shake things up a bit, and then it is important to understand that every single year is unique. But going even deeper at some seasonality data, we could see that for February, it tends to be a pretty good month, but most of the gains end up happening in the first half. The second half is pretty rough.
It really is. Seeing the second half of February is kind of brutal there. It kind of ruins the gains from the first half of the month, right? So that's some interesting data. So we'll have to see how that goes. I know that, we've even looked at some historical data here heading into February that even showed that the VIX tends to pop up around this time of the year as well. So that's just another piece of info to keep in mind whenever we see other information that the market might, have a bad second half of the month.
Yeah, no doubt. So, Tom, it's great to look at all of this historical data, but looking at the SPY chart right now, what is actually happening? What are the key levels we have to look for, and what are you seeing with the charts?
Before we get too zoomed in on the intraday side of the SPY, I just wanted to show everybody the daily right now to really just show that, hey, the SPY has been stuck here for a little while. Ever since that Fed meeting back around December 18th, the SPY has really had trouble getting out to new highs here. And with Friday, we saw a pretty steep turnaround on this little recovery, as you can tell by the size of that red candle. And this is going to be very significant here, Mike, because the SPY is essentially posting another lower high. And we've talked about this a lot, but we had the all-time high on SPY up around $610. SPY tested that Friday, and then Trump came out with that tariff news and really sent the SPY lower. We're seeing a very weird pattern and setup here on the S&P 500, and for even traders, Mike, that like to, let's say, follow the trend lines and look at a lot of trend lines, SPY even started to break below some pretty big trend lines on Friday. So I'm actually shifting to the bear side because the SPY fell under the key $600 level in after hours. So that's going to be a major resistance to keep on the radar. As far as big supports, I really like 598 just under here. That's going to be a big spot. We've seen a few good touches on the SPY very close to that. I'm also going to be watching 595 and then especially this recent low around 590. That's going to be a very big area. You can see the wick extending pretty clear down to there, and that'll be a pretty big target if the SPY does continue to sell off in this way. But Mike, this pattern of this double top or lower high is not good to see.
Not at all. And the price action that we saw on Friday says a lot in multiple different ways. Not only was the move down, decent, but it also continued all throughout after hours, which shows that there was not only, a fair amount of selling pressure, but it was also pretty urgent. And again, that's something that you don't want to see. And when we look at just other areas of the market, even like Bitcoin, that trade 24/7, it's still bleeding, and Bitcoin is now all the way down to that $97,000 level. It fell right through 100K, and it's not great things that you want to see. So heading into this week, you have to be willing to adapt. There's a lot of ways to make money trading stocks up, but you have to be willing to trade them down as well. The market is not only constantly changing, but it is changing at a quicker and quicker pace, given just everything we have going on in the world right now. So be willing to adapt. That's what you have to do as a trader. We mentioned multiple tickers like SQQQ, UVXY, SPXS, and others that tend to rise when the market falls. But of course, there are also options like puts and a bunch of other ways to navigate, increasing volatility markets. But with that being said, Tom, let's jump right into some setups and predictions. A stock that is close on my radar right now is CCL, and it is on watch to the downside. This stock has been doing very well over the past year, and it is starting to face some pretty heavy resistance right around this like $28 to like $29 level. It rejected pretty strongly off of it on Friday, and given that it has been like in this like overextended area for some time now, and considering the way it's rejecting, it is definitely on my bearish radar for this week. I would like to see a breakdown past like the $27.50 level, and to see this stock put as much pressure on its recent lows as possible.
Mine too, Mike. It's pretty rough in the short term. CCL has been ripping to the upside, and if we start to see it really dip under that 27.50 area, like you said, it's going to be a big one to keep on the radar. But with my first setup, I'm looking at Apple to the downside, ticker symbol AAPL. They've had a lot of negative news in the short term with their China sales and everything like that. They also reported earnings last week, but on Friday, they gave everything right back. And then, of course, at the end of the day, with the SPY's bearish price action, they continued down in a pretty big way. I really like this support in the short term around 233. There's been like a good triple bottom, actually, whenever we look at the bounce from Friday. So pretty much 3 touches and 3 good bounces back off this. And I'm pretty much looking for Apple to gap down below here and continue to the downside. And there's some big levels to watch for on the Bookmap. Specifically, I like 233. You can see the sellers coming, or the buyers, stacking up there around the end of the day Friday. But even 230 in the short term, it's going to be a huge psychological level where there were a lot of buyers stacked up around 23,000 shares around the end of the day. Not the most ever, but still pretty significant for something like Apple. So keep watching 230 and 233. If we see solid breakdowns of those areas this week, it's going to be a bear fest, in my opinion. And plus, we're coming off of all this tariff news.
Alrighty, sounds good there. Another stock that is close on watch is SLV. This is technically an ETF that follows silver prices, but basically we have been seeing a pretty good uptrend with precious metals in general. Gold prices actually ran past record highs last week, which was pretty awesome to see. Silver has been increasing, not as much as gold, but when there is good momentum with precious metals, both of them do tend to benefit quite a bit, and SLV definitely has that more parabolic potential, which is good to see. So SLV is definitely on my bullish radar in the event we see more and more investors out there resort to safe haven assets, given the current situation we're seeing in the market, but also the expected situation, given that Trump said that he will have some tariffs coming for the EU later on as well.
Yeah, it seems like there's just no country that's really going to be immune to those, but we'll obviously see all the more specifics with those, Mike, but I'll definitely keep silver on the radar. That is for certain. And with my next stock, it definitely kind of ties into the tariff situation as well. I'm looking at BABA and a lot of the China stocks back to the downside. So last week, we actually did start to see quite a bit of positivity. There was talk about, obviously, the tariffs being delayed with that false Reuters report. And then on Friday, of course, as that report started to come out as false. We saw a lot of the China stocks sell off a lot. BABA, of course, is down 3.8%. Now, I was pretty bullish on China stocks in the short term. They've actually been ripping a lot off of recent support, but now BABA just rebroke below $100 again, and if I see a rebreak below 96.50 come Monday, I'm definitely going to be watching it back to the downside in the short term. Now, for the long term, you guys might have your own thesis there, but in the short term, with all this negative price action and news, it's something that I'm definitely going to be watching for.
Sounds good, and they'll definitely be on my radar as well. They tend to move quite a bit, so good stuff there. And Tom, it is now about that time for today's momentum plays. And with the first one, we have AbbVie to the upside.
Yeah, we talked about AbbVie to the upside last week, and they actually did really well with their earnings in the morning. I am going to be watching 192 to the upside, so if we get that rebreak above 192, I'll be watching them up. And remember, they had those earnings Friday, so we're looking for a good earnings continuation here.
All right, with the next one, we have Peloton, but to the downside.
Poor Peloton. They started breaking under support. If they fall under $7.68, right around the low of day Friday, then keep watching them down. I like that 770 support.
All right, and then with the last one, we have Hims also to the upside.
Yeah, and this one we also talked a lot about last week, especially as it was rising so much, 9.78% on Friday. People love the intraday price action here. If we can see it break above 38.20, then keep watching it to the upside as well.
Sounds good. So we have Hims and AbbVie on watch for potential moves higher, and then we have Peloton on watch for a potential move lower. These three stocks are on watch for potential momentum plays if and only if they break through the levels listed. The stronger and more consistent they move, the better the setups become. Adjust with the trend changes as they happen, like with any other type of strategy, and have stop losses to protect yourself. It's very important for volatile stocks, especially for trend following, momentum style day trade setups. So keep these ones close on the radar. And besides that, let's jump right into today's $864,000 big money trade. And we are looking at ticker symbol MS. On Friday, the big money bought the 135 strike put options that expire on September 19th of 2025. This is an $864,000 trade, betting that MS will go lower. MS is already trading pretty close to the strike price, as it is currently at like around $138.40. Looking at MS, it has been doing pretty well over the past year, but it is facing some pretty heavy resistance in the short term, right around like this like $141 area, and we are just seeing like a broader sell-off in the grand scheme of things. So yeah, it's definitely a very interesting setup. I like how these options are close to the money and have time to them.
Yeah, we're starting to see a big shift here in the short term, and a lot of these stocks that have been blasting off started to really pull back on Friday, and I don't think that banks are going to necessarily hide from the tariff situation either, right? If we start to see a market-wide sell-off, there'll probably be a market-wide sell-off, right, where we see a lot of sectors fall, and the bleeding will kind of spill over into some sectors that might, not get affected by the tariffs so much, but there's just so much selling out there that we're starting to see things snowball a bit. Now, I know that there is a lot of talk with banks coming up in the short term as well. There's been a lot going on with Powell and, of course, interest rates and different things going on there where they're kind of scaling back their cuts for 2025. So that might end up impacting banks a little bit too. But I'm definitely watching it in the short term, Mike. It's an interesting big money trade, and it has a lot of time to it too, out to September. So I would say this, like what the banks do in the next couple weeks probably doesn't make a big difference to this big money trader, right? They're probably looking at it more for a few months down the road.
Yeah, and I like how there's definitely some capital to this trade coming in at $864,000. It's definitely it definitely shows that there's confidence there. So either way, keep this one close on the radar. But if you guys haven't already, definitely consider obliterating that subscribe button to get our videos recommended to you more often. There's a lot going on in the market right now. It takes us hours to make these videos, and we cover everything you have to know in around 20 to 25 minutes or less. So basically, definitely consider joining the StockedUp crew. You'll get our videos recommended to you more often. We cover the most important news, information, earnings, big money trades, and everything you have to know. So Hopefully we'll see you more often, but we also want to give a giant shout out to today's member of the day, Hockey, in the Stocked Up Discord, who had a great post on Friday showing his first $1,000 trading day, which was awesome to see. So huge shout out to you, Hockey. Keep up the great work going forward, and great job with those Hims call options and Oklo call options. Keep up the great work going forward. If you guys are into short-term trading, definitely check out that first link in the description in the comments down below to get full access to our army of trading robots, join our weekly live events, chat with Tom and myself all day long, access to big money trades every single day, and much, much more. And besides that, thank you all so much for watching, and let's crush it in the market this week.